Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
As we get things underway today, a couple of big reports this week. An interesting announcement earlier today. But to kick things off, let's recap what happened this week in the markets.
On the cattle side this week, cash cattle were 80 cents higher this week. Those feeder cattle auctions were anywhere from steady to $3 higher on the week. The February live cattle futures contract closed up 20 cents, while the March feeder cattle futures contract was down $2.85. March corn futures were up 20 cents, I think partly responsible for what was the lower feeder cattle futures we saw. On the beef side, choice box beef prices were $10.60 higher this week. We really had strength across the board and everything but briskets this week on the beef side. Pork side, barrel and gill prices were $3.25 higher this week. And the February lean hog futures contract closed up strong at $5.50 on the week. The pork cutout value also gained this week, up a little more than $6. Hams and bellies really led the way for strength in that pork cutout value.
It definitely were some big jumps in some of those cutouts this week, and interesting to watch kind of how that ebbed and flowed throughout the week. How much does that have to do with demand, and especially I think about the ham side of things, because we know typically where those are in most demand.
Yeah, so I think that's part of the issue that we have seen in terms of those higher cutout values. I'll also say slower hog slaughter, I think, has tightened up pork supplies here of late as well and been responsible for strengthening that pork cutout value.
And we'll talk about that coming up here in just a couple of minutes. Let's talk weekly slaughter numbers as we take a look at those. How are we faring so far this month?
Yeah, so if we look at cattle here for the week ending January 22nd, USDA is estimating a run of 636,000 head of cattle. That's 18,000 more than where we were a week ago, but is 26,000 below where we were a year ago. On the hog side, a run of 2.44 million head this week, according to USDA. That will increase that weekly slaughter by 74,000 head relative to last week, but 278,000 head below where we were a year ago.
When we take a look at the hog slaughter numbers, we're seeing some revisions downward from USDA. What does that indicate in terms of slaughter, in terms of availability of pork? What's kind of the big picture? How does that lead into the big picture for pork supplies?
Yeah, so I think we're finding many of these pork processing plants not able to run at the levels they anticipate running at. I think labor has had a big issue in terms of the volume that we're pushing through the plants the last few weeks. I assume with the surge, with the latest COVID surge, that's had implications for labor availability in some of these plants. So I do think we're seeing, some cuts there. I kind of wonder what we see in terms of hog weights if we continue down this road of slower slaughter as we continue through the remainder of January into February.
All right, let's talk livestock slaughter numbers as we take a look at our first report this week. An increase in beef production.
Yeah, that's right. So we got 2021 in the books now and data available for us to talk all of calendar 2021 beef production, 27.9 billion pounds in 2021. That's 2.8% above where we were in 2020. So growth in beef production. The opposite on the pork side of the equation. So a run of 27.7 billion pounds of pork in 2021. That was 2.2% below where we were in 2020. Now, we go back a little bit and find some other years of history to compare. Both production levels are higher. Beef production relative to 2016 up nearly 11%, while pork production in 2021 relative to 2016 was also up 11%. So we've been growing those supplies. So even though pork production lower in 2021, that's the first time we can say that in a few years. When we look at a little bit of the data beyond production, cattle slaughter for the year up 3.2%. just one to look at. Beef cow slaughter up 9%, for example. We did get a little bit of help on the weight side with cattle dressed weights that were down 0.5% for 2021 relative to 2020. On the pork side, hog slaughter down 1.9%. Couple that with 0.3% lower dressed weights, and you get the 2.2% lower pork production for 2021.
I think it's interesting, and especially as we're going to talk about these cattle on feed numbers, seeing that beef cow slaughter number up 9%, that seems like a pretty big number.
So for sure, I keep saying all of the data that we have available to us about beef cow inventory would suggest to me we're going to get a much smaller beef cow inventory number out of USDA when we get to the end of the month. And as you point out, a 9% increase in beef cow slaughter is well above any kind of average slaughter that we would see occurring when we aren't talking about culling beef cows.
Scott, let's talk cattle on feed numbers. As we take a look at those, a little surprising maybe as we take a look at both on feed and cattle placed in December.
Yeah, there must have been some cattle wandering outside of fences that we found as we looked at placements in December of 21. I joke a little bit, but a bearish report generally, especially relative to pre-report estimates. On feed January 1 came in at 100.6 of a year ago. That does fall outside the pre-report range, upper end of the pre-report range by 0.5%. So more on feed than anybody expected pre-report. Placed in December came in at 106.5 of a year ago. That's also outside the upper end of the range by 1.5%, and 4 percentage points above the midpoint of pre-report estimates. So we placed more cattle on feed in December. So it's interesting that we have the story of fewer cows, yet we really haven't worked through the cattle supplies yet at this point. And I think that will take us a little more time. And again, more cattle to deal with in the first half of 2022. The other piece of that beef cow number, though, however, is when we look at the percentage of heifers relative to the total on feed, it continues to be at high levels. It came in at 38.8 again this quarter, which tells me we're not holding back heifers either, and we're slaughtering more cows. All of that's very positive for a smaller beef cow inventory here at the end of January.
So I have a question about that. As we talk about contraction, which a 9% beef cow slaughter, 38, almost 39% of heifers on feed, we know that's good potentially, or is positive for cattle prices. But does that also mean that we're going to see retail prices go up? And we're already seeing some supply chain disruptions. My husband was at the grocery store today and sent me a picture and said, I have never seen grocery store shelves and the meat counter look like this. Maybe pre-pandemic, but at that point we weren't, like in March of 2020, we weren't grocery shopping, right? So does that also maybe teeter on concern for the demand picture and being able to knowing prices are going up, knowing we're concerned about jobs and employment and all of those things kind of coming together?
We for sure want to watch all of those points. I mean, you very clearly lay out the scenario that we need demand to remain fairly strong. And I say that because the supply side is going to contract. I mean, we almost with certainty know we're going to have fewer cattle to slaughter the next couple of 3 years. And that likely leads to less supplies for domestic consumers and ultimately probably higher prices. We're going to push those higher prices at consumers. Let's hope demand stays fairly strong. Jobs keep coming available and consumers end up with more money in their pockets, because we need all of those things to happen. Again, though, we'll say, in the past when we've talked about one livestock species moving differently than the others, that can create a situation where we get substitution. So substitution away from beef and towards pork and chicken if beef prices are going to be really high. But I just remind us that we're high across the board right now. So it's not like there's a good alternative that isn't also relatively expensive. So that may limit some of that switching that we might have seen traditionally.
All right, before we wrap up today, quickly, I think we just need to touch on this. Farm Bureau released this afternoon, and I know it was addressed during their delegate session at their convention earlier this month. They want to see a revision to the Cattle Transparency Act. So let's talk a little bit about the revision and what does that potentially do for the path forward for that compromise bill from Senators Chuck Grassley and Deb Fischer from Iowa and Nebraska.
Yeah, so I think they've really kind of backed away from these mandatory minimum cash trade levels in terms of what changes they want to see, which leaves us with contract library, for example, and I think there's a lot of interest in more information in terms of cattle prices. So, that's not surprising. Now the question is moving that legislation forward now that you have a national organization basically saying they're not in favor of mandatory minimums. It, I think, makes it a tougher road. I just would always continue to remind us that this is a tough issue. This is not a simple issue to talk through in terms of, are we to a point where there isn't enough cash trade occurring at times? And I think that's a very difficult question to answer, and it makes it very difficult to know how to provide a legislative fix. It just reminds me that there's just going to be more back and forth and more interest in how do we really address this problem, long term, if there's a problem. And, I couch this in looking ahead going, I already know margins probably get narrower for packers as we get well into 2022 and into 2023, as we're going to have fewer cattle available for slaughter, and we are going to get at least some expansion beginning to occur in terms of slaughter capacity. So all those things to me get those margins lower, and so then it's as you have that as the backdrop, hasn't occurred yet, but it's coming. How do you want to address some of this cattle transparency?
Definitely be interesting to watch how that unfolds heading into, I'll be in Houston at the end of this month, beginning of next month for cattlemen's. And that's always a very interesting conversation between them as well. Scott, anything else this week?
I think we've covered most of it.
All right. A pretty quiet week for us next week, but a big report nonetheless.
That's right. We'll get cold storage out of the gate next week to see whether we're building freezer supplies or not.
Good to know. We will see you next Friday.
Sounds good, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And if you're looking for some great podcasts and great listening material while you're on the road or just hanging out, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.